For decades, we've all looked at silver through just a couple of lenses, right? It's either an industrial metal or it's a safe haven investment. But what if that's all changed? We're diving into a really compelling argument today that suggests a series of recent geopolitical moves has completely shattered that old view. The argument is that silver is no longer just a commodity, it's being turned into a strategic weapon.
And this quote right here, this is the heart of it. This is the central idea we're going to unpack. It's a bold statement, for sure, but the thinking goes like this. When one country gets control over a resource the entire world needs, and then that country gets to decide who gets it and who doesn't, well, that resource isn't just being traded anymore. It's being wielded like a weapon.
And this is where everything really flips on its head. The critical question for major industries is no longer, hey, what's the price of silver today? Instead, it's becoming, can we physically get our hands on it at any price? This fundamental shift from worrying about price to worrying about pure availability is really the key that unlocks this entire argument.
Okay, so why is all this happening right now? Well, the story really begins with a market that was already way out of balance. A vulnerability that was just sitting there, waiting for something to happen. This underlying problem has a name. It's called a structural deficit. And what's really important to understand here is that this isn't just a one-time thing. According to the source, for 5 years straight, the world has been using way more silver than we've been able to dig up or recycle. We've basically been patching over this huge crack by draining our above-ground stockpiles, and that's a fix that just can't last forever. So just how bad is the problem right now? Well, the projected deficit for this year alone is a staggering 117 million ounces. Just let that number sink in for a second. That's not a small rounding error. It is a massive physical shortfall in a commodity the entire globe depends on. And this slide right here really puts the scale of the problem into perspective. That 11 million ounce number, get this, it's more silver than the entire nation of Mexico, the world's #1 silver producer, can pull out of the ground in a whole year. So this year, the world needs an entire extra Mexico's worth of silver that just doesn't exist. This is the bone-dry kindling that was just waiting for a spark. So, what was the spark? What was the match that lit this fire? The source we're looking at points to two very specific geopolitical events that basically turned this long-term problem into an immediate full-blown crisis. And here it is, the 1-2 punch. First, the US government officially changed its view on silver's importance. Then, almost immediately afterward, China responded with a major policy move of its own. This combination is what the source argues has completely changed the game.
Let's dig into that first punch. When the US designated silver a critical mineral, it wasn't just some boring paperwork. The government's own definition tells you the whole story. By doing this, the US was officially admitting two huge things. First, that our economy and our national security literally can't function without silver. And second, and this is the real kicker, its supply chain is incredibly fragile and at high risk of being cut off. It was like they sent up a giant red flare for everyone to see. And you can see on this timeline just how fast everything escalated. In November 2025, the US sends up that flare. The very next month, China's Ministry of Commerce announces its new policy, a restrictive export licensing and quota system, specifically targeting refined silver. And the deadline isn't some far-off date in the future. It's January 1st, 2026. That's the day this theoretical risk becomes a very harsh, very practical reality.
So, what happens when this geopolitical trigger smacks right into that pre-existing deficit? Well, it creates what the source calls the geopolitical price lock, a fundamental change to how the silver market works, a new reality.
The geopolitical price lock is the source's name for what happens when the world's dominant supplier decides to control the spigot. This isn't about short-term price swings. The argument is that China's new policy has effectively created a new, permanent, and much higher price floor for silver, simply by taking the single largest chunk of supply off the open market. The baseline price, the starting point for every deal, gets aggressively reset and locked in at a whole new level.
Now, this is fascinating. This chart shows you exactly why China has this kind of power. This isn't about who digs the most raw ore out of the ground. No, this is about the crucial industrial step of refining that ore into the 99.9% pure silver that industry actually needs. And in that arena, China controls an estimated 65% of the entire world's output. When the country that refines 2/3 of the world's silver says, "Our needs come first," well, everyone else has an immediate problem. So this leads to a pretty natural question that you might be thinking. If the world is short on silver and the price is going up, why don't mining companies just, mine more of it? It seems like a simple fix, but the reality of the silver market is way more complicated than that.
The reason comes down to a concept called supply inelasticity. In plain English, it just means that even if the price of silver tripled overnight, miners can't just flip a switch and boost production. The supply response is incredibly slow. It's kind of like trying to turn a giant oil tanker. You can spin the wheel, but it takes miles for the ship to actually change direction.
And this chart right here perfectly illustrates the biggest reason for that slow response. A massive 70% of all newly mined silver doesn't even come from a silver mine. It's a byproduct. It's the little bit of extra stuff that comes out when you're mining for other metals like copper, zinc, and lead. And the decision to spend billions on a new copper mine, which can take a decade to build, is based on the price of copper, not the small amount of silver that tags along for the ride.
So at the exact same moment that supply is being choked off by geopolitics and is structurally unable to respond, demand is doing the complete opposite. It's exploding. And we're not talking about optional demand here. This is non-negotiable demand from the most critical industries building our future. You just can't build modern solar panels, EVs, AI data centers, or advanced military tech without silver. This exploding demand is on a violent collision course with a newly crippled supply.
Okay, so given this collision course, what happens next? Let's take a look at the forecasts from the source and the kind of framework it suggests for navigating this new reality.
The most credible forecasts, according to the source, are starting to zero in on a single number, $100 an ounce. Now, this isn't presented as some wild guess. The argument is that this might be the price required to actually cause what's called demand destruction, to make silver so expensive that some industries are literally forced to cancel projects just to bring the market back into some kind of fragile balance.
And if a $100 price isn't just possible, but maybe even necessary to balance the market, then your whole mindset has to shift. According to the source, this is no longer about speculating on a price move, it's now about urgently managing a very real risk. The source material lays out a three-step framework it calls the physical metal shield. First step, take an honest look at your direct and indirect reliance on silver. Second step, secure physical metal or contracts for physical delivery because in a true shortage, paper promises might not be enough. And the third step, especially for businesses, is to start adjusting your financial plans and stress testing your budgets right now for a much higher baseline cost for silver. So let's just boil this entire argument down to its core pillars. A deep, multi-year structural deficit set the stage. Recent geopolitical moves by the US and China created a powerful choke point on supply. The world's visible stockpiles are being drained to cover these shortfalls. And finally, because of the way silver is mined, supply is inelastic. It just can't react quickly to fix the problem.
And this really is the final takeaway from the source material. The argument is that the fundamentals are locked in. The geopolitical trigger has been pulled, the date is on the calendar, so the question is no longer if a global squeeze is coming. The only real question left is a personal one. How severe is that squeeze going to be for you?